WBNW. This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide, AI and Your Financial Plan. It's new for the month of July. And Paul, we're hearing companies all over the investment universe talking about how they're utilizing artificial intelligence in their workplace. And one of them that's been getting more and more mention is specifically in investment design and strategy. What are you hearing from major money managers when it comes to artificial intelligence?
One of the powerful things about AI is the ability to take vast amounts of data and synthesize it down into something comprehensive that's easily usable to run portfolio models out there. So utilizing price to earnings data and other financial metrics, these AI systems can collaborate with all of the data that they're provided and come out with an outcome to rebalance a portfolio and to make certain investment decisions over time.
Now, what I get worried about is companies starting to market this stuff as something that it's not. To your knowledge, is there anything out there that is actually recommending securities based on AI that has any sort of track record?
Not at this point in time. It's really important to note that this technology is in its infancy, and while it is exciting and there is a lot to be learned and further developed here, there is no proven case that there is a perfected AI model in place that's publicly available.
The brand new guide from the Armstrong Advisory Group for the month of July is called AI and Your Financial Plan. You can get your copy by calling 800-393-4001. Again, that's AI and Your Financial Plan. Get your free copy by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you today, and in fact, all week, as we typically are. And we've got a busy week on tap this week. It is.
I will argue, Chuck, that in terms of there may end up being more.
I don't want to argue.
There may end up being more important weeks in hindsight based on new information that we learn, but in terms of scheduled data, there's not a busier or more important week at all this year.
You can make a case ever.
Maybe.
Ever.
Just if we get a surprise tariff announcement some other week, if we get another Liberation Day, those were all, in hindsight, more important weeks for the state of things. But in terms of the stuff that's scheduled to come out this week, there's nothing that's going to compare with it. So where should we start?
At the beginning. Here's what we've got. Today, quite honestly, there's nothing really interesting. So go about your day, go do what you do, and you'll be fine. If you care about the Dallas Fed Manufacturing Index, which we generally bring up once every 5 years when it gets either really bad or really good, okay, that's today at 10:30, but otherwise, go forth and multiply. If you look at tomorrow, this is where things really get heavy. Tomorrow morning, we get S&P Case-Shiller Home Price Index. We get the FHFA Home Price Index. The JOLTS report. We get the Conference Board Consumer Confidence. That's just on the data side of things. When we go and look at what we have earnings-wise, not as heavy as some of the later days, but Visa, Procter & Gamble, United Health, Merck, Boeing, Waste Management, Starbucks, UPS, Mondelez. I mean, it's you're sitting there and you're like, okay, I'm starting to get a little bit excited here. If that doesn't do it for you, if you're more of a Fed guy, Wednesday's the day for you because you have the Fed and ADP employment change for July, Q2 GDP growth rate, first estimate that we're going to get on that side of things. And then you head over to earnings and you say, okay, on the earnings side, I got Microsoft, I got Meta, I got Qualcomm. I got some beef there for earnings as well.
By the way, Microsoft and Meta, along with NVIDIA, those three companies have made up approximately half of the total gain of the S&P 500 this year. So pretty important names for this market.
Can we talk about why that is? Because there's only one thing. To quote our old friend Larry Kudlow, profits are the mother's milk of stocks. This is according to data from KNAPP, K-N-A-P-P, not I'm feeling a little bit tired and need a break.
Got it.
Quote, if we remove the technology and communication services sectors, because Meta ends up in communication services because, hey, just lump them in with AT&T since they're basically the same thing.
Right. No difference between
Why
Meta and
wouldn't you
AT&T?
put those two companies in the same sector? Of course, you should. If we remove the technology and communication services sectors to get a read on consumption and investment outside of the AI boom, earnings are tracking a paltry 0.8% year over year, and sales growth is 3.1%, meaning margins are compressing. So pretty much what it's telling you, the reason why those companies are accounting for so much growth in the market is because the other 497 companies aren't really doing anything. There's not, and granted, this is broader than that when you include, chip makers, but basically the rest of the companies outside those two sectors are kind of just chopping wood. It's all it is there. So, let's see, where was I? Wednesday you get Microsoft, Meta, and Qualcomm. Then Thursday, you take a look at what we have coming up then. You get PCE price index, personal income and spending, employment cost index, and weekly jobless claims. Another big day for economic data. And golly gee willikers, after the bell, you got Apple and Amazon reporting, and you've also got a little company known as MasterCard, you got Comcast, Bristol-Myers Squibb, AbbVie, Southern Company. I mean, again, it's just another big day for earnings. We cap it all off on Friday with the jobs report in ISM manufacturing. No real major earnings. I mean, sure, like if you sit there and you're like, hey, I'm really interested in, ExxonMobil. Okay, like fine, like it's still a $400 billion company. It's not a market driver.
Sure.
At this point, everyone kind of just knows what you're going to get there. But I mean, aside from today, you have 96 hours of economic and earnings fun, and I can't think of anything better in my life.
So I'm sorry to hear that.
Sorry, did I go too far on that?
2 daughters, a wife.
I know. I was trying to really sell it. I went too far, didn't I?
Let's try and narrow this down a little bit. What matters, what doesn't this week? We get consumer sentiment final reading on Friday morning. Not important to me. The PCE data that we're going to get, while interesting, probably just confirms a bunch of things that we already know. So I'm not really looking forward to.
I made
that
a top
read.
5, Michael.
Top 5.
I followed the instructions in the email that
I
Tucker
thought it was
sent.
top 3.
I'm an overachiever.
Okay. All right. So give me your top 1, and we'll just compare here.
Jobs.
Top 1.
But which jobs report?
The jobs
report. The Friday jobs
Yes.
report. Okay.
Do you want to know why, or do you just want me to leave it at that?
No, you got to justify your case. Give me why.
The entire economy right now is hinging on 2 things: the labor market not breaking down and AI spend. Given the fact that this whole AI spend is predicated on the labor market not breaking down, the labor market can't break down.
So I know that that report is far more encompassing, but give me the case for why you're more interested in the jobs report than the JOLTS report that we get Tuesday.
JOLTS is 2 months old.
It is. It is 2 months
old. The survey
old.
response rate is horrible these days.
So is the jobs report.
Not as bad.
Yeah. Okay. I bring up the JOLTS report because we've been looking at that as something that has been driving the direction of some of this stuff, at least previously over the last few years. The response rate has been pretty bad. But on the unemployment numbers and things along those lines, we have the muddy waters of retiring boomers. We've got the muddy waters of all sorts of immigration and deportations. And so I'm pretty interested in the JOLTS numbers to see directionally where are we heading. I think that might give you a better indication of whether things are heating up or breaking down than the unemployment rate itself. But you're right that it is reading things back in June, and that is pretty outdated.
And the other counter to it is the only reason we care about the JOLTS report is that it influences the jobs report.
True.
So ultimately, the JOLTS can do what it wants as long as the jobs report continues to come in fine-ish. It's fine-ish.
So jobs were to the top of my
I had
list.
JOLTS second, though.
You had JOLTS
Just
second.
to be fair.
Okay.
I had JOLTS second.
Of all of the earnings, I'm most interested in what Amazon has to say, believe it or not.
I was least interested in them.
Really? Okay,
Yeah.
so here's my case on
Great.
Amazon.
We didn't even prepare this.
We did not. I am looking at Amazon as the company that I can point to that may be raising prices due to tariffs. We've seen a few pieces published now about price movements at Amazon compared to Walmart, Target, and others. And if they did choose to go raise prices, they're going to end up providing cover to a whole bunch of other retailers that are out there.
Sure.
The stock has not done a whole lot this year, but I'm interested in I don't really care about their earnings because I don't think it's going to really knock the cover off the ball or move the market.
It's tough to say you don't care about the earnings when you're saying that you're really excited about the earnings.
I'm interested in what they have to say regarding tariffs. And what they're doing in terms of price moves.
I don't think they're going to say anything.
I think they're going to be asked a bunch of pointed questions.
And I don't think they're going to answer.
Yeah, maybe they don't because of the mistakes that people have made on that front so far.
Like Amazon?
Amazon and Walmart, yeah.
You remember when Amazon was like, hey, we're going to put a tariff
We're going to put a
surcharge.
tariff price tag
1 hour
there.
later, we did not say we were going to put a tariff surcharge on your prices.
Jeff called us, and he said that if we do that, we're all fired, so we're not doing that anymore. I don't know. They make the top of my list for that reason.
I had Microsoft and Meta above them. Microsoft and Meta were my third. I lumped them in one group.
Okay.
It's the AI spend.
Yep.
And that is the driver of this market right now. And if there is any wavering in that AI spend, then the companies that have been driving this thing for the last 3 months have some questions.
Mm-hmm.
I put the Fed fourth, which I mean, gosh, like what a week where the Fed has a meeting.
The Fed is coming fourth.
And you're like, yeah, it's probably the fourth most important thing that's going to happen this week.
Well, here's the compelling case for why I would agree with you. They're not going to do anything. But it's quite possible that you have 2 voting members dissent on their decision, which is something that hasn't happened in 30 years.
Which is kind of interesting. The counterpoint to it is it still doesn't change where policy is going to be.
True.
And I also think that when it comes to the Fed, they're not in the driver's seat right now because they've taken themselves out of it. They've said, hey, as long as the economic data is still okay, we're not doing anything.
We're not moving. Yeah.
And that's why I put the jobs report above, because if you have both those in the same week, the only thing that moves the Fed, unemployment going up.
So does that mean inflation's going to number 5?
I don't have PCE. Honestly,
It's not even in top 5.
Here's why I don't think PCE is important, even though the Fed watches it. Everyone's gotten so good at predicting where PCE is going to be based on the input pass-throughs from CPI and PPI. There's been no excitement in it for the last year or two. Everyone has it down to a
Hits
science.
the target. Yep.
And so once you get CPI and PPI out of the way, the market's already done the heavy lifting on PCE.
Right.
Because people are just so good at projecting it now.
Also, the Fed won't have the data prior to their meeting, so even if there were a surprise, it's not going to affect policy until the next meeting.
Let's take a quick break. When we return, let's talk a little bit about the deal between the European Union and the United States of America after this.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street, right here on the Financial Exchange Radio Network. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Artificial intelligence is having a profound effect on daily business. Its reach and result is significant and will likely only continue to grow, and that may present an incredible opportunity to include in a financial plan for the future. Hi, this is Chuck Zodda from the Armstrong Advisory Group. AI's technologies could be described as groundbreaking, and that's why we've written a new guide this month called AI in Your Financial Plan. Understanding how AI works may offer you insight and information about how to craft a plan that you haven't yet thought of, but it's not without risk. Call the Armstrong Advisory Group right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001. You can also request this guide online by visiting armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Celebrate National Farmers Market Week, August 3rd through 9th. It's the perfect time to explore your local market and enjoy some peak summer produce, sweet corn, juicy tomatoes, berries, and more. Support local farms, eat fresh, and build community. Mass Farmers Market supports more than 200 markets across Massachusetts, growing food access and farm sustainability statewide. Find a market near you at massfarmersmarkets.org. That's massfarmersmarkets.org. Sponsored by Mass Farmers Markets.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Now's a great time to register for the DAV 5K, taking place Saturday, November 8th at Fort Independence on Castle Island. The race has sold out each of the past 4 years, and slots are continuing to fill up quickly. So don't delay. Visit dav5k.boston to reserve your spot, or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston.
So yesterday, I think it was around midday, the United States and EU announced a trade deal in which the EU is going to have its exports to the U.S. tariffed at a 15% rate. The EU is going to we'll talk about this, but attempt to buy $750 billion of American energy products over 3 years and invest an additional $600 billion in the U.S. And so this is kind of another major domino to fall, and basically the only ones that you have left outstanding where something unexpected could happen later this week are Mexico and Canada. Mm-hmm. Aside from that, your other major trading partners, Japan and the EU, are pretty much locked into their tariff rates at this point, or as locked in as they can be with handshake deals that are not approved by Congress.
Or the European Union voting members.
Correct. So I think ultimately it's something where you kind of look at where things are and you have a pretty good sense of where the tariffs are going to be now. At least we think we do. And now the question is, hey, what's the actual impact going to be as it starts showing up in the United States?
Yeah, so in terms of what this deal reportedly is going to encompass, it's going to include autos, which was a big item. There's a lot of lack of clarity about just about everything else. There's a number of things that will be exempted from this. So aircraft and their components, certain chemicals, semiconductor equipment, and some agricultural products appear to be exempted from the new tariffs in general. Autos do not appear to be exempted, so those will be facing a 15% tariff rate, which is lower than the current 25% for imported autos. I want to talk a little bit about that effect on U.S. automakers. Apparently no real announcements when it comes to alcohol or liquor sales across the two countries, so more to come on that. And a real lack of clarity when it comes to steel tariffs as well, which are currently set at 50%. Does this include steel? Does it maintain that 50% for any country that is exporting to the United States? In terms of the major categories of things getting traded between the EU and the United States. So in terms of imports from the European Union. The single biggest category in 2024 was machinery and vehicles. It sounds like some of those will be exempted. Obviously, airplanes and parts are going to be exempted from that. Chemicals is the next largest category. And then you get into just kind of other types of manufactured goods, other goods, energy, raw materials, etc., food and drink included in there as well. But the biggest categories here, machinery and vehicles and chemicals, have a number of exempted types of products that will be in here. I just am... What's truly compelling to me is how dramatically the goalpost has moved from where we were on January 1st. If you had told investors that the European Union, Japan, Canada, Mexico, we're all going to face tariff rates of 15% minimum by midway through this year, it would have been a disaster zone. We're sitting here now in late July, and everyone's kind of welcoming the idea of 15% tariff rates on European goods.
So I think the big thing, there are two pieces here. One that's within the U.S.'s control, one that isn't. Well, they're actually both outside, but hear me out. The big thing that we have not seen is any kind of significant retaliation from anyone.
True.
And so if that's off the table, it takes some of the worst case scenarios off the table where you don't have a counter 15% tariff or something like that going into effect on U.S. exports.
Just look at what we saw with China for a period of time. That
Correct.
Type of escalation, if off the table, provides a lot of relief.
The other piece is the economic data has still been good. And the AI earnings and AI-adjacent earnings have been good enough to offset the fact that the rest of the earnings pictures I talked about in the first segment, corporate earnings are rising 0.8% year over year if you don't include all that AI spend. And so I think that when you look at it, hey, there's been enough happening in AI to continue to move things on that front. And the bottom hasn't fallen out as far as economic data at this point. And so markets are rightly saying, at least based on the data that's out there right now, okay, we're gonna assume that this continues. Now, is that the right assumption? The next 6 months are going to tell us, because we're just starting to see this tariff impact right now. The other piece, when we look at some of the pledges in here, so one of the pieces inside of this was $250 billion in annual U.S. energy imports or exports to the EU over the next 3 years. And this is going to be an awful tough slog here.
Yep.
And the reason why is just like if you look at what the EU imported pretty much in like total energy imports last year, it's pretty much saying it's all going to have to come from the U.S., like pretty close to all of it.
Just shut down the pipelines.
And so, like, could it happen in theory? Yes. Could there be more energy that is bought? Yes. The other piece on this $600 billion investment, the EU, this is according to Politico this morning. I'll quote from them. The EU has admitted it doesn't have the power to deliver on a promise to invest $600 billion in the United States economy because the cash would come entirely from private sector investment over which Brussels has no authority. So there's that. What does it all mean? Hey, again, unless the economic data breaks down, there's no change right now. Quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable and it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets beginning a jam-packed week in positive territory as investors react to a trade deal between the U.S. and European Union. Wall Street's also bracing for one of the busiest weeks of the year. We'll see more Mag 7 earnings from Microsoft, Meta, Amazon, Apple, and many other major names outside of tech, including Visa, Procter & Gamble, Boeing, and Starbucks. As for the economic data calendar, we have GDP, an inflation reading, JOLTS, and a jobs report on Friday. Oh, and we have a Fed meeting on Wednesday. Right now, the Dow is up by only 8 points, so completely flat. S&P 500 is up about 0.1%, also 8 points higher, and the NASDAQ is up nearly 0.4% or 73 points. Russell 2000 is completely flat. 10-year Treasury yield is up 1 basis point at 4.402%, and crude oil is up 2% higher today, trading at $66.58 a barrel. Several energy companies are seeing gains on the day in reaction to the U.S.-EU trade deal, where the EU agreed to buy $750 billion worth of U.S. energy, including liquefied natural gas. Venture Global, New Fortress Energy, and Cheniere Energy are up anywhere between 2 and 4%. U.S. defense stocks, including Lockheed Martin, also seeing modest gains after President Trump said the EU would be purchasing a vast amount of military equipment. Lockheed is up nearly 1%. Meanwhile, South Korea's Samsung Electronics inked a $16.5 billion deal with Tesla to manufacture AI chips for the EV maker in Texas. CEO Elon Musk confirmed the deal, saying Samsung's new facilities in Texas will be dedicated to making the company's next-generation AI6 chip. Tesla shares up nearly 3%, while Samsung stock jumped nearly 7% higher on the news. And JP Morgan upgraded Nike to overweight from neutral, saying the athletic shoemaker can recover over the next several years. Nike shares are up nearly 4% on the day. I'm Tucker Silva, and that is Wall Street Watch.
Piece here from the Financial Times. How long can the U.S. economy defy expectations? And what it's talking about is, look, you've got tariffs that have gone into place. You have, I mean, that's, I think, probably the biggest thing that's been visible from an economic perspective. When we talk about the labor force, certainly the impact of deportations on the labor force, especially in parts of the economy that tend to have large numbers of undocumented workers, think construction, hospitality, places like that. How's that potentially impacting the U.S. economy? And I think the big thing is when we look at two things. When we look at the broad economic data, and quite honestly, when you look at the stock market, neither one is signaling any kind of, flashing red lights right now. And so the question out there is the headline of, hey, how long can the U.S. economy, defy these expectations that maybe it's going to slow down?
Can you define the expectations right now accurately? Because I'm struggling to do so a bit.
Well, let me talk about my own personal expectations, because I don't know if someone else didn't, verbalize theirs. I don't want to speak for
I'm just trying to read the, when I look at Fox Business or CNBC or Bloomberg, what the general expectations are. But go ahead.
I'll be honest. My personal expectations were that we would be starting to see more of a slowdown in the U.S. economy by late June, early July.
Yeah.
And we haven't yet. Now, granted, we haven't gotten any of the July data.
Sure.
And there was an overall slowdown in the first half of the year, but there's nothing that you can point to where you say, hey, this is because of policies X, Y, and Z that this is happening.
Yep.
And so I think the question and where I've gotten to in terms of kind of my mental approach to this is, look, if the first half of the year is most likely going to show somewhere around 1 to 1.25% GDP growth. Slower than last year, but again, we've seen some of these bursts before where this happens. If the second half of the year is in the same ballpark, quite honestly, I don't think you can really keep waiting around being like, hey, when's the impact going to happen? It's the same reason that we said, look, if inflation doesn't spike by the end of last year and unemployment doesn't spike, you declare that the Fed got the soft landing and you move on, because something that happens in 2027 has nothing to do with the Fed raising rates in 2022.
True. Yep.
So I'm kind of in the same ballpark on this, which is, hey, if you've got all these tariffs that went into effect, and if you have all these deportations that are happening, and the U.S. economy is still fine at the end of this year, fine, I would define as not in recession. How long are you going to wait for the effect to show up?
I would add one caveat where it's not in recession and also not experiencing over 4% inflation, which again, either of those would be pretty surprising. But I'm with you. We have seen in investors, markets, and the U.S. economy prove out to continue to be quite resilient, and you have not seen those more dramatic potential outcomes for markets that could have come to pass to this point. I still keep running the question. By all accounts, it appears that primarily U.S. corporations are, I guess, what do you want to call it, subsidizing prices to consumers by eating into their own profit margins.
It's fine.
It seems to be...
I don't know.
Agreed. Totally fine. Does that change? Is just a huge question that I don't have an answer to. If I'm... Again, these aren't the companies that are driving the stock market forward, to be clear, right? We just talked about which ones are. It's Microsoft, it's Meta, it's NVIDIA. None of those are worried about the tariff impact and needing to drive prices through to consumers. If they have to, NVIDIA will have no issue charging higher prices to their customers. But for the other 497 companies that are out there, how long do you sit around and say, yeah, I'm willing to take the profit margin hit, I'm willing to see my stock price take a hit? I don't have an answer to that.
It's, again, the two things that are keeping everything together right now. Labor is, in recent weeks, like the last 3-4 weeks, you can make a case that labor's showing renewed strength.
Yeah.
Not like...
Unemployment rate went down.
Weekly jobless claims are falling.
Job openings, I believe, went up in the most recent read for May. Like, these are indications that in spite of that stagnant workforce that we've been talking about, it's not ringing alarm bells.
Right. So if that's happening, if that's the case where the labor market is actually strengthening right now, then you kind of look at it and go, there's not really anything to worry about, because if the labor market is, and again, we need, another month or two of this to be able to say, hey, there's something there. If that's happening, okay, there's your next growth engine.
Right.
It's the fact that consumer spending can power you through here.
Yeah.
If you go the other way, then you're sitting there and you're saying, okay, housing is kind of in the toilet. Construction is slipping, pricing is slipping, so you're not getting anything out of that. If labor starts to deteriorate, hey, that's going to impact consumer spending in the second half. That's not going to be great. And that pretty much leaves you with this AI data center CapEx boom.
Right.
As the lone feather in the cap where you're saying, okay, that's the only thing that's really pulling this puppy along. Is that enough? Maybe.
Yeah.
But to this point, the last 3-4 weeks, you look at the data and you go, yeah, what is there? Like, why would you have anything, happen imminently here? The only other thing that's out there that we still need to watch is what happens on pricing as these tariffs have, more time to come into effect. And certainly it seems like baseline tariff, and this is even from President Trump this morning, he says that he expects the global baseline tariff will likely be somewhere in the 15 to 20% range. So moving up from 10, right as we're starting to feel the impact of that 10, these are things that you wonder about. How does that potentially impact the economy further? Can companies, absorb another 5 to 10% increase in import costs? We'll have to see. Let's take a quick break here. When we return, you want to talk Fed?
Sure.
All right.
Federal Reserve.
We're talking Fed when we come back.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. It's a effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix, lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Celebrate National Farmers Market Week, August 3rd through 9th. It's the perfect time to explore your local market and enjoy some peak summer produce, sweet corn, juicy tomatoes, berries, and more. Support local farms, eat fresh, and build community. Mass Farmers Market supports more than 200 markets across Massachusetts, growing food access and farm sustainability statewide. Find a market near you at massfarmersmarkets.org. That's massfarmersmarkets.org. Sponsored by Mass Farmers Markets.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
We got a piece here today from Barron's. It's titled, "The Fed Hasn't Seen a Split Like This in 30 Years." Are they going bowling? Are they doing gymnastics? Jay Powell's out there on the
710.
Jay Powell's out there on the rings.
Yeah. So I think some context here is important. We talk about it frequently on the show, but if you just get the update, once every 6 weeks that the Fed did this, the Fed did that, you might come away with the wrong idea. The way that the Federal Reserve governs is by vote. It's by a committee of a board of governors. And generally speaking, that board of governors almost always acts unanimously. Now, a lot of the discussions are behind closed doors, and there's always some disagreement to some degree. But generally speaking, that board acts unanimously, and it's anticipated that at this next meeting, you could have 2 voting members of the Fed disagreeing with the direction that they end up going, which would be a pretty significant level because we haven't seen that in 30 years. Now, to some degree, it doesn't matter because it's not going to change what the Federal Reserve actually does. But, it may cause the Fed, it'll certainly cause the Fed to need to answer questions about why those two dissented. It may cause them to need to play to them a little bit more, and it will almost certainly get those two Federal Reserve members a whole bunch more attention in the media, which is perhaps why it matters the least, because it may all just be happening because those two want more attention in the media.
And specifically, they want more attention in the media because
they want to get picked as the next chair.
And I want to talk about this because this honestly bothers me a little. And not that like someone wants to be Fed chair, because look, ultimately, if you want to be Fed chair, you certainly campaign for it.
Sure.
Behind the scenes. The idea that now someone who wants to be Fed chair needs to be making, public statements and taking public actions that indicate, hey, you should pick me because I'll do XYZ, kind of undermines the whole credibility of the thing.
It does. I have a tough time. So the other thing that is true is that there are typically more dissents that happen towards the end of a Fed chair's term. This is not, I think having two dissent at the same time is abnormal, but having governors vote against the group towards the end of a chair's term is actually normal and does happen more often. And
not to this extent.
Not to this extent, agreed. But I just... Yes, it does affect credibility. Yes, I do question now, hey, Waller and Bowman, are you being serious about this, or are you just looking for the nod? And that in of itself does affect the overall credibility. But
what
it might just be a furthering of norms.
And here's the thing. When Jay Powell was named Fed chair by President Trump in 2018.
Yep.
Did we spend all of 2017 being like, wow, Jay's really putting himself out there, look at what he's saying, look at what he's talking about?
No, it wasn't making headlines at all.
No, it wasn't a thing. And I think here's the piece that I really would... Here's the thing that I will find interesting, because it seems like it's probably... It seems like this Fed chair thing is down to 4 people.
Okay.
You've got Waller, you've got Warsh, you've got Bessent, and you've got Hassett.
Yep.
Those are the 4 names that are being talked about.
Agreed.
I'm not going to say who would be good or bad at this point because, well, actually I will. I think Waller would be the best out of any of them, but that's just me. What would be really interesting to see, and I'm going to use Bessent as the example here, because Bessent, for all of the last year or two, it was very clear that he was running to try to be Treasury Secretary in the event that Trump won last November.
Yep.
And the reason I say this is he was very critical of the Fed cutting interest rates then, and also in particular was very critical of Janet Yellen for using a mix of issuance that was skewed to the short term, issuing more short-term bonds than previous Treasury Secretaries had done. And Bessent comes into the Treasury Secretary role this year, and what's he been doing? Continuing the exact same mix.
Yeah.
And so part of it, I look at it and it's like, okay, so you said you were going to do this and now you're doing something else. Granted, it's a different job for Treasury Secretary where there's no committee that would overrule you necessarily.
Sure.
But part of me looks at this, and let's say that Waller gets in. And Waller's been one of the guys who, again, I think he would be the best, but he's also been saying you need to cut rates, you need to cut rates. Wouldn't it be interesting if he got in and then his first vote is to not cut rates?
I don't think it would be. I think it would be to cut rates once and then just sit around and wait, because that seems to be his perspective. But let's face the facts. I don't think Waller's getting in anyway.
Yeah, if you're handicapping it right now based on kind of what we hear and and again, like we don't know. Like we're not we don't have, the minutia on speed dial like we used to. I think if I'm handicapping it today, 40% Hassett.
Yep.
35% Warsh. 20% to Bessent. and whatever's left over to Waller.
60.
I think it's like 5.
Oh.
But they're basically the same.
Yeah. I'm around there.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Piece in CNBC. The headline is, he's showing up. Things are getting better at Boeing under CEO Ortberg. Can he keep it going? I'll honestly make the case. I'm not sure that there's been too much that has changed to this point. Simply because, yes, the stock has gone up. But maybe that's just because the stock was doing so badly because of years of mismanagement before.
Yeah, you can make a compelling case that so long as no other defects were found in planes, that the stock price was bound to go up.
And I guess my case on this is, look, turning around an aircraft manufacturer takes years, if not decades. It's not like Kelly Ortberg suddenly walked in and was like, hey, guys, make sure all the screws are tightened. Hey, is that door plug in? Jimmy, you got to put the door plug in. We can't
got windows on all these things, right?
So, yeah, I think that you could, if you walk into a deli, you can turn that puppy around in a year. I don't know you can turn around an aircraft manufacturer in a year is the only point I'm trying to make. It's a big ship.
Yep.
So, let's hold off on so much praise until we get a little bit further down the line, and we'll see where things go. But Jimmy, really, put that door plug in. Let's take a quick break. When we come back, we got hour 2 in just a bit.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix. Lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. I'm joined today by Paul Lane to talk about our brand new guide for the month of July, AI and Your Financial Plan. Paul, one of the big areas that is a pain point for a lot of folks is working on their budget. It's kind of the step one for your financial plan. And I know there's a number of tools that are starting to incorporate AI in their budgeting plans. How is this starting to work and benefit folks?
Yeah, like you mentioned, Mike, it's an area which is really difficult. You ask a lot of the clients that we meet with on a regular basis, how much do you spend on a monthly basis? Simple question, but hard to come up with that answer. What these AI tools can do do is aggregate all of your total spending together, categorize different areas, and use that data to try and project what you may spend in the future. This is a critical step in the retirement planning process to get a sense for what are you spending today and can you afford to spend that much in the future. It is important to note, certainly, that there are drawbacks that come with it too.
Yeah, talk to me.
This is a technology that's in its early stages, and it's only as good as the data that's fed to it. There can be some issues sometimes with properly categorizing certain types of expenses over time, and as such, you have to be very careful when you're using this type of technology and perhaps vet it against your own assumptions through that old school spreadsheet fashion as well.
It's always a good idea, but especially when we're talking about brand new emerging technologies. Folks, the brand new guide from the Armstrong Advisory Group is all about AI and how it could affect your financial planning strategy. If you would like to get your free copy, call the Armstrong Advisory Group at 800-393-4001. The guide again is AI and your financial plan. It's available at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking things off here, it's Chuck, Mike, and Tucker with you, and we've got stocks. Not really doing much of anything. You're just trying to poke them with a stick and seeing if anything will happen, but pretty quiet out there. The Dow is down 17 points, less than a 20th%. That's right, we're back to doing 20th% again. The S&P 500's up 5 points, a little less than a 10th%, and the NASDAQ is up 70 points, about a 1/3%. So pretty quiet, mixed trading. This is probably going to be the only real calm that I think we see this week because, listen, it's not the Super Bowl, but it's more like...
It's Mike and Chuck's Super Bowl.
It's like a 5-game series that we've got this week for the sport of your choosing. Used to be baseball for me, but honestly, in recent years, baseball's kind of fallen off a little bit. But you got it's a jammed week aside from this. On the economic data side of things, I'm not even going to tell you what day these things are. I'm just going to go through the list. Case-Shiller Home Price Index, FHFA Home Price Index, JOLTS job openings, consumer confidence, ADP employment, GDP, Fed meeting, core PCE, personal income, personal spending, employment cost index, jobless claims, the jobs report, ISM manufacturing. That's all the economic data that we have this week. On the earnings side of things, and I'm just going to go with the big ones because I think about 25% of the S&P 500 reports this week, so I'm not going to name all of them because you didn't tune in to hear me list a bunch of names. Instead, we've got Visa, Procter & Gamble, United Health, Merck, Boeing, Waste Management, Starbucks, UPS. We've got Microsoft, Meta, Qualcomm, ADP, American Electric Power, Ford. We've got Apple, Amazon, MasterCard, AbbVie, Comcast, Bristol-Myers Squibb, Southern Company, Coinbase. And we've got Insperity. Nope. I just picked the smallest name on the list there. But, so you got a lot of earnings, a lot of economic data. It's a big, big week here. And the potential for a lot of movement in either direction, depending on how all of this ends up shaking out.
We were talking earlier about the narrative that's dominating markets right now, and I'm not sure that I have one, but I think it's resilience. If there's a narrative that has dominated markets so far, it's been the American economy has proven out to be resilient in spite of uncertainty around trade policy, in spite of potential for inflation and deportations effect on all sorts of different labor markets. It is the economy that has proven resilient. Employers have not fired. They have not hired dramatically, but prices have not dramatically risen. And so it's, do we get more resilience? And, there's a few different data points that are going to come out, whether it's earnings or actual fundamental economic data produced by the government that are going to have the ability to prove out or contradict that overall sentiment.
Yeah, the overall story is the economic data is fine, though slowing modestly, and the AI spend is increased, and so AI is once again powering a hot market to new all-time highs.
There we have it.
That's where we are. Piece in the Wall Street Journal, and this gets at one of the things that's been interesting to see in kind of this stagnant labor market. CEOs trumpet smaller workforces as a sign of corporate health. And this is interesting because normally, historically, when you say, hey, our company's doing great, you say, we grew our headcount to X number of people this year.
Yeah, it's not to say that you don't get, like plenty of CEOs have been rewarded with higher stock prices on the announcement of layoffs. Like that piece can be true. But it does seem like a bit of a shift in terms of CEOs wanting to point out that, hey, we're getting the same amount of work done with fewer people on board.
It's kind of going back to the Zuck thought from a couple years ago. Remember they had their year of efficiency?
Yeah.
It's kind of that approach here. And I think the big question that's out there is, historically, one of the biggest drivers of the U.S. economy has been household spending, consumer spending, if you will. It becomes harder to consume when you don't have a steady income. And so I think the question that is out there in my mind, and again, this is not saying like companies shouldn't do this, I'm not saying that, but okay, if enough companies start trying to slim down in order to prove that they're healthy and, efficient, how does that impact the aggregate spending power of the American consumer?
Yeah, I mean, that is the all-important question, right? If you have some of the worst-case scenarios start to play out as a reaction to artificial intelligence, right? When we've talked about the potential for this technology, it's been, well, what if it puts everybody out of a job? I've always been suspect of that, but you could have periods of time where that is the case. But it does feel like in this moment, when artificial intelligence is the thing that will get your stock price bid up and will get you TV time if you're a CEO, that the logical reaction would be, okay, how can we do more with less? And whether it's truly because of artificial intelligence or not, how can we do it more with less and convince the general public that it's due to automation, efficiency, and artificial intelligence?
Yeah, I want to find a quote here from the ServiceNow CEO because he had where is it? I'm just going to stop and just let the music play now. I don't have it front and center. I should have bookmarked it, but he had a really kind of direct quote about how they're trying to use AI. ServiceNow, if you're not familiar with them, they operate a bunch of call centers and like customer service centers, hence the name ServiceNow. And he had a quote that quite literally was, I'm paraphrasing here, hey, we're trying to get rid of some of the jobs that people really hate and don't actually want to work in. And so that's where we're going to be using AI, is getting rid of those jobs that no one likes to do. But those jobs are going to be gone once we do this. And I thought that was, really direct and really kind of putting it out there as far as the approach. And I think the only question is, hey, if that can actually be done and then replicated across different industries and different segments, what do we do with this? And it's not to say don't do this, because ultimately, when we're talking about raising living standards, it's all about being able to do more with fewer inputs. One of my favorite stats of the 20th century, at the beginning of the 20th century, there were 7 million American farmers. At the end, there were 1 million, and we still were able to feed all of our people, predominantly with food that's not imported. The vast majority of American food is not imported from overseas. And ultimately, for society as a whole, it's a really good thing to not have to have as many people working to feed us. If you're a farmer and you happen to be listening, you're like, Chuck, my job's really hard, and I would appreciate it if you don't tell me that everyone else is, doing great, but my job's, kind of hard these days. Totally get it. And this gets at the question of, gross exaggeration here, if you could press one button at the start of the morning and produce everything that's needed for the world, that's great, but how do you allocate all of that out, and how do you figure this out? It's a societal question, not an economics one.
While we're talking about efficiencies in artificial intelligence, I was listening to or read an interview over the weekend with somebody working out of a Philippine call center, which, if you're not familiar, Philippines is a frequent location for call centers for U.S. customers. They speak great English and obviously low labor costs. There's been this talk of artificial intelligence just replacing call centers. In this case, it didn't sound like they actually were. But, when you call up your average 800 number, you first get that message, this call may be monitored or recorded for quality training purposes. What they're apparently doing in some of these call centers now is having artificial intelligence not sample the calls, but listen to every single call, provide immediate feedback to those workers on tone, language, all the sorts of things that would go with working as a call center representative, assigning a score grade to each of the representatives to judge them on. And in some cases, which this was the one that I found absolutely wild.
Don't tell me laying them off.
Probably not directly laying them off, but providing the data you would need as an employer to determine if you're going to lay somebody off, yes. But actually changing the person's voice live while on the phone with somebody else to
don't like that.
Remove an accent.
Don't like it.
I don't like it either. But these are some of the uses that we are seeing in artificial intelligence. And again, not what I expected when I heard about a call center and artificial intelligence. Certainly not improving your quality of life if you work in that call center, because quite literally every single call you are on is now being listened to, and you're the whole idea of being in customer service for a call center is, okay, get prepared to get yelled at for 8 hours a day and not lose it on the customer. That is the type of thing that we are seeing artificial intelligence move into. And I don't know, I feel like we talk about AI so frequently here without actually understanding where it's being used, how it's being used, the goods and bads and uglies of it. And that was a new one for me that I hadn't previously heard of. And I would imagine that it's probably pretty universal when you're talking about large call centers that, if you work in one these days, every single call is being monitored by an artificial intelligence.
I don't like it.
Oh, yeah, it sucks, but
I don't like it.
Yeah. But as the employer of those people, you suddenly have more data at your fingertips than you ever did before. I get the desire to have it.
I do. But I don't like it.
Yeah, comes with a lot of downsides.
Let's take a quick break. When we return, if the AI lets us, we're going to do a little bit of trivia, and then we'll talk about inflation after this.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Summer's here, New England, and it's the perfect time to trade the daily routine for something extraordinary. Say hello to the U.S. Virgin Islands, America's Caribbean paradise. Explore the vibrant history and flavor of St. Croix. Lounge on the stunning beaches of St. Thomas, or find your peace on the quiet shores of St. John. From the moment you arrive, you'll feel it. You're naturally in rhythm with the heartbeat of the islands. There's no passport needed, no currency to exchange, just warm weather, clear blue water, and unforgettable experiences waiting for you. Whether you're planning a romantic escape, a family adventure, or a little of both, this is the summer to make it happen. Go to visitusvi.com to learn more and start planning. That's visitusvi.com. Your island getaway is closer than you think. The U.S. Virgin Islands, where summer never ends. Book your trip today at visitusvi.com. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and you probably heard this, but Friday night Happy Gilmore 2 arrived on Netflix. The first Happy Gilmore movie hit theaters back in 1996, and fans were stunned when a famous game show host showed up to beat down Happy Gilmore. And the trivia question today is, which famous game show host had a memorable cameo in the first Happy Gilmore? Once again, which famous game show host had a memorable cameo in the first Happy Gilmore? Be the ninth person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt. Once again, the ninth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Let's talk a little bit here about this study that was conducted by Indeed, where pretty much what they did is using a bunch of the data that they have and this and that, they tried to figure out, hey, what percentage of Americans actually are seeing their wages outpacing inflation over the last 12 months?
Aggregate, I believe they are wages outpacing inflation, right?
Yes, but obviously not everyone gets the same raise each year.
Of course.
And so what Indeed found is, according to their estimates, about 43% of Americans had their wage growth overshadowed by inflation in the last year. And pretty much what you are seeing here is, and I'll quote from this, while annual wage growth remains just above the annual rate of inflation, which grew to 2.7% in June, the gap between the two is the narrowest it's been in the last 12 months. What do we do with this?
I was going to file it in the useless column.
I don't know if it's useless.
I mean,
like the specific percentage of Americans that are, struggling from a wage growth perspective. Is there a difference between like 43 and 48 and 38? Like I don't know that means anything.
But nor do I have any historical context for what this looked like in each of the last 2 decades.
Correct.
So, is it normal for 43% of Americans to have their wages getting outpaced by inflation? I don't know. It might be.
It probably is. Like if you look at like historical data, a lot of it in the 2010s was, okay, wage growth is running 2.5% to 3%, and inflation's 1.5% to 2%. There are definitely people in the country.
It's always pretty close,
right? Like, and that's just because it's kind of how it works.
I found it interesting which types of jobs are seeing the biggest wage growth. Like that was interesting to me.
Yeah, what do we see there?
So electrical engineering topped Indeed's list of fastest growing wages, 6.3% pay growth. Interesting legal jobs had a 5.1% bump. Marketing, project management, math, and IT operations.
What's a math job? Like no one goes into math.
No, they don't.
That's not so. Like, what does that mean?
Yeah, I don't know. Statistician.
You can major in math. You can't work in math unless you're a high school teacher.
Or a researcher of some sort. Yeah, I don't know how you major. I don't know how you get an employment in math.
Tucker, can you find some good math jobs?
I'm seeing teachers.
Correct.
Teach math.
But that would be education, not math. So I'm just
literally
wondering.
That's all I'm saying.
I'm wondering, how do they define a job in mathematics?
Physicians and surgeons led the way in slowest growing wage with only a 0.8% increase. Driving jobs, so bus driver, truck driver, I guess, taxi cab driver, also pretty slow. Arts and entertainment, software development, that's one we've talked about at length here. Software development, just seeing low hiring rates and big changes due to AI. Beauty and wellness and logistics support rounding out the bottom categories according to Indeed. So, I don't know, there weren't, well, other than math, there weren't huge questions for me on the growth side. I was a little bit surprised, given what we know about the lack of availability of healthcare in this country right now, or at least healthcare workers, that physicians and surgeons led the way in the slowest growth category. But I suppose when you're already at a pretty high starting point in a heavily looked at space.
I suspect it's probably... No, I don't know enough about medical billing to be able to comment on it.
Okay.
I don't, so I'm just not going to.
Yeah, fair enough. So, again, interesting but useful. I don't know that it's useful. I mean, the counterpiece of this is, a big chunk of Americans did not see their wages rise with the cost of living, but more than half did.
This then takes us to this next piece here from CNBC, titled, "Even Many High-Earning Americans Don't Feel Wealthy, Here's Why." And the answer is really, really simple. They're around other people who make more money, and so they feel poor, even though they're not actually poor.
I like that summary.
Like, it's quite honestly, it
go talk to somebody that makes $1 million a year, and they're going to feel like they're not keeping up with the neighbor who makes $3 million a year.
This talks about how 14% of all U.S. households make $200,000 or more each year. Nearly 2/3 of people with salaries over $300,000 struggle with credit card debt. Quite honestly, if you have a salary of over $300,000 a year, there are 7.95 billion people on the planet who would trade places with you.
Oh, yeah.
And so if you can't make it work, I'm not saying like anything bad about you as a person.
Oh, yeah. Lots of things could have led you to this point.
Correct.
Could have been a medical disaster.
What I am saying
all the
is
rest.
You need to figure out like where you go from here to get on better financial footing with that kind of income, because it gets really hard to make more than that once you're already there.
Yeah.
It's, hey, I went from making $50,000 a year to $300,000. Great, my salary went up 6x. You're probably not going to be making $1.8 million anytime in your life, because it's really freaking hard to make $1.8 million.
Yeah.
So I think ultimately this is something that we all need to work on, because, look, we all struggle with it. I woke up this morning and of course, the first thing I do, because I'm, a human being in 2025, I look at my phone, which I know is stupid. I know I shouldn't do it. And I get an ad for, a shirt. And I'm like, oh, boy, should I buy that shirt? And immediately I'm like, no, Chuck, you're not cool anymore. You don't need to buy shirts. You need to wear shirts, but not buy shirts.
Yeah, non-cool Chuck just walks around shirtless.
Wear the ones you already own. Don't buy more.
Okay, got it.
Quick break. More shirts after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, is the healthy spouse allowed to keep anything when the sick spouse enters a nursing home? And what happens if the sick spouse has the majority of the income?
Great question, because when you're talking about applying for Medicaid last minute, or when someone enters a nursing home and you want to do this last minute, they're going to look at both assets and income, right? So from an asset standpoint, as a married couple, they do allow you to keep approximately $148,000. That piece is indexed for inflation or changes every year. The sick spouse is allowed to keep $2,000. So you're around $150,000 of total assets that you can keep. By the way, if you're single, you only get to keep $2,000 in assets. From an income perspective, the good news is that the healthy spouse can keep all of the healthy spouse's income, Social Security, pension, you name it. And so it does not matter how much income the healthy spouse has, but they are entitled to at least a minimum monthly maintenance needs allowance, but no maximum.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are flat to kick off a jam-packed week as investors react to a trade deal between the U.S. and EU. Ahead of Friday's trade deadline, President Trump this morning said the baseline tariff rate for the world would be in the range of 15 to 20%. Right now, the Dow is off by only 10 points. S&P 500 is up only 3 points. NASDAQ is up by 0.2% to 49 points higher. Russell 2000 is dipping by 3 points. 10-year Treasury yield up 2 basis points at 4.414%, and crude oil... And crude oil is up nearly 2% higher, trading at $66.35 a barrel. Wall Street's readying for one of the busiest weeks of the year, where we'll see more Mag 7 earnings from Microsoft, Meta, Amazon, Apple, and many other major names outside of tech, including Visa, Procter & Gamble, Boeing, and Starbucks. As for the economic data calendar, we have a GDP reading, inflation reading, JOLTS, and a jobs report on Friday. Oh, and we have a Fed meeting on Wednesday, so very busy week ahead. Several energy companies seeing gains on the day in reaction to the U.S.-EU trade deal, where the EU agreed to buy $750 billion worth of U.S. energy, including liquefied natural gas. Venture Global, New Fortress Energy, and Cheniere Energy stocks are up anywhere between 2 and 5%. Meanwhile, South Korea's Samsung Electronics inked a $16.5 billion deal with Tesla to manufacture AI chips for the EV maker in Texas. CEO Elon Musk confirmed the deal, saying Samsung's new facilities in Texas will be dedicated to making the company's next-gen AI6 chip. Tesla shares are up nearly 3%, while Samsung stock jumped about 7% higher. And JP Morgan upgraded Nike to overweight from neutral, saying the athletic shoemaker can recover over the next several years. Nike shares are up nearly 4% on that upgrade. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked the trivia question: which famous game show host had a memorable cameo in Happy Gilmore 1? That would, of course, be Bob Barker. Scott in Waltham is our winner today, taking home a Financial Exchange Show t-shirt. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Piece in the Wall Street Journal: Americans see their 401ks not just as nest eggs, but as rainy day funds. And what it talks about is the fact that 4.8% of Americans took hardship withdrawals from 401k plans last year. That is significantly up from the pre-pandemic average of about 2%. This according to data out of Vanguard, who gets an awful lot of information on 401ks since they manage a whole bunch of them.
One of the largest 401k providers out there. I've been struggling with what to make of this, Chuck. It's a relatively low unemployment environment, so I don't think it's largely from people that are laid off taking hardship withdrawals. It is seemingly significantly higher than where it was pre-pandemic. A few things are true at the same time. One, inflation has been really bad. Credit card debts have been, increasing. There's been a number of those things that have been true. At the same time, over the course of the last decade, we've had a lot more companies participating in auto enrollment, auto increases in 401ks, and so folks who might not have had a 401k 10 years ago now suddenly do and have a larger portion of their wealth in that 401k. So maybe this is not some blip on the radar. Maybe it's the new norm. But I don't know. I'm not sure that it is a sign of dire economic circumstances, but it also could be.
I would agree. And I don't like to get too judgmental on this stuff for a couple of reasons. The first being, when I was in my 20s, I pulled a bunch of money out of my 401k. Now, I was doing it to buy a house, so it was for a down payment on a house because, quite honestly, I didn't have any other money floating around.
Sure.
Like, it was my only option. So I don't like to just be like, oh, like, you should never do this because, A, I did it myself, and B, I don't know, the context of why anyone else is necessarily doing this.
I think we can say that there can be good reasons to pull money out of a 401k and pay the penalty.
Correct.
The examples given of someone running up a whole bunch of debt and needing the 401k money to pay it off. I'm not sure that's a good idea or not. If it's a home equity line of credit at like 8% interest, probably not. If it's credit cards at 30, then it might
probably makes sense.
They go through another person, somebody who's TikTok famous about pulling all the money out of his 401k and sailing the world with his cat. Normally, I'd say pretty bad idea, but he was also diagnosed with like a life-changing illness that is going to apparently ruin his spine in a few years. Yeah, go ahead, take it out.
Do you have to bring a life jacket for the cat?
Good question. So there can be circumstances where this is a good idea. The problem is when you see the rate of these types of withdrawals increasing from the low 2s to the high 4s, that to me indicates something beyond the one-off good decisions that are being made.
Let me ask you this. One of the big things that has bumped up that's noted in here is automatic enrollment. So there are more Americans that are automatically enrolled in 401k plans now than before. Do we think that maybe on the margin, those people who are now contributing, when they leave the job, they say, oh, yeah, of course, I'm going to go use that, and maybe it'll bridge me until my next job or something like that.
It very well could be, and it is cited specifically that many people who switch jobs end up just cashing out their 401ks, which, to be clear, is a bad idea. But 1/3 of people who leave jobs annually end up liquidating their 401k plans and paying the taxes and penalties.
Let me ask one more question, just because this is one that it just popped into my head, and I don't want to lose it because I think it's a good one. 10% penalty for withdrawals before age 59.5. Just right, too high, or too low? And it depends on what you're trying to incentivize, obviously. But here, just thinking it out, let's say you doubled that to a 20% penalty, you're telling people, don't touch this until 59.5. If you lower it, let's be honest, there could be a compelling reason why you say, we don't need this penalty, get rid of it, and there shouldn't be any. More people are going to take that money out now. More tax revenue is raised today at the cost of retirement stability down the road.
Yep. Which is going to fall on all of us as taxpayers. So I do struggle with it, but I don't think I would be in favor of raising it because the people who are going to pay that penalty are the ones that can least afford it, to be really clear.
Here's where I would go. I would say lifetime, make it $50,000. You have a lifetime $50,000 exemption from early withdrawal penalties. If you've got to use it for whatever you want, fun, buying a house, paying off medical debt, buying a car, great. You got $50,000 in penalty-free withdrawals. You go above that, penalties double whatever your tax bracket is. So complicated, but fun.
Yeah, but at least has some logic to it,
and gives people, hey, stuff happens. Yep. I don't want to penalize someone who that's their only savings.
Right? Do I pay the 10% penalty or do I lose my home?
Right.
Those are really serious questions. 401ks and all of these retirement plans are immensely complicated, right? We only kind of scratch the surface on some of these hardship withdrawals, but for instance, there's a lot of Americans who are actually able to tap this penalty-free at 55 if they hit certain circumstances, largely losing their jobs. There are other exceptions if you are having a medical emergency or buying your first home, as Chuck mentioned. How you use that 401k, look, it is a break in the tax code. It is a specifically written in break in there to benefit you in particular. And if you don't feel like you are maximizing that tax gift that the IRS is giving you, whether it's a traditional or Roth 401k employer plan, please give the folks at Armstrong Advisory Group a call so we can look at your personal financial situation and evaluate how you're using it today and how you should be using it going forward. There are immense benefits that come from these employer plans, but very few people maximize those benefits. The number's 800-393-4001 for the Armstrong Advisory Group. Again, that number's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Piece in the Wall Street Journal. It's titled, "Welcome to the Grocery Store Where Prices Change 100 Times a Day."
Is that prices on one item change 100 times a day? Or across the grocery store, do prices change 100 times a day? Either way, I'm not enthusiastic.
Either way, it's talking about how you've got these electronic shelf labels that can just be mass updated, and so they, propagate out the new pricing, and companies can do this based on, competitor pricing, how many people are walking through an aisle, this, that, whatever.
There's a CEO in Norway who's talking about it, and he gives the most innocent version of it. We lower the price maybe 10 cents, and then our competitors do the same. And it kind of gets to be a race to the bottom, and my answer is I really doubt it.
And I got to tell you, this sucks. I'm sorry. This sucks. This is the same as, you want to buy an airline ticket and we know that your IP address is currently coming from a wealthy zip code, you're going to get the expensive tickets. All this micro-targeting to try to maximize corporate profit at the expense of not actually improving your product sucks. I'm sorry.
It's not going to be a race to the bottom on prices,
no,
folks. It's going to be, what is it outside now? 85 degrees? Guess what?
Water bottles.
Every 3 degrees that the prices increase, that the temperature increases, bump up ice cream prices and water bottles. Oh, it started to rain in a thunderstorm? Okay, we're going to be jacking up those poncho prices immediately. And we don't need to send somebody out to go and, shuffle the price deck on those because it's super easy with these digital price tags.
This is not making more money because you run a better company.
You're better evaluating people's willingness to pay a certain price.
Yes. And that, to me, I don't know why it feels wrong, but it's just you're not winning based on the merits of your product or your offering or your execution. You're just winning based on...
I think why it feels wrong is because we are only used to it in discretionary places like airline tickets and hotels. We're not used to it in somewhere as basic as a grocery store where it is a necessity.
Now, on the other hand... I've been to 2 bars that do this. One of them was called the stock market, and it's really cool because
I would love to go to this place.
They cut the prices on the stuff that no one's buying and the stuff that everyone likes. They raise it up, and it's kind of cool because the whole vibe is, I'm trying to get the best deal on alcohol. Which one am I going to buy? But that is kind of like a whole game. The whole premise of the bar is buying into that.
Yeah.
Plus you're drinking, so you're like, okay, whatever anyways.
Yeah, at grocery stores, I am... I do think, by the way, it's coming. I don't think there's much we can do about it. I think it's heading our way, and that's what you will see. Is prices move based on weather, based on all sorts of other factors, and they move immediately. And this is the dream of any CEO to be able to dynamically price your goods this way, based on that's the whole economics view is hey, you want to hit that price that is the perfect equilibrium between somebody's willingness to pay and the supply of the good that you have. It feels a lot worse when it's in something as necessary as groceries.
It's just getting really dystopian, man.
Yeah.
It's just, hey, I want to be at the beach with a coconut and just hanging out. And that's where we should be going in life because it should be getting easier. And instead, you're trying to slap me with an extra 5 cents on the tomatoes because I got a big head or something like that.
We haven't gotten there. They're not going to read Chuck's baldness and say
coming.
We're bumping up.
I'm telling you, I know
we're putting shampoo prices on sale because it's Chuck walking down the aisle rather than Tucker.
They're going to, this is where we're going, though, Mike. It's going to be a bald guy is walking by, and we know we're going to screw him somehow. Let's take a quick break. When we come back, it's Stack Roulette.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Changes to Medicaid occur almost every year, and if you're not informed, your assets could be at risk, especially if you or your spouse need nursing home care. Cushing & Dolan are experts in elder law, and their new guide is called Last Minute Medicaid Eligibility. It'll help you understand the Medicaid process, which is critically important if you're retired or getting close to retiring. The guide has important information regarding numerous strategies that can protect your assets from the nursing home. It could be your primary home, a vacation home, or any rental property you may own. You've worked hard to achieve wealth, so don't take chances when it comes to protecting it. Get your copy of Cushing & Dolan's brand new guide called Last Minute Medicaid Eligibility. Call right now, 866-848-5699. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Artificial intelligence is constantly evolving and can even be a revolutionary asset to a financial strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called AI and Your Financial Plan. In it, we explain how artificial intelligence continues to make inroads into our daily lives and how the advent of its technologies may affect an existing or future financial plan. AI serves the public in a variety of ways, from apps to monitor personal finances to tools that analyze investments. AI is not the future anymore. Its effect is felt by businesses of all kinds on a daily basis. Call us today at 800-393-4001 and ask for your free guide. That number again is 800-393-4001, or you can request the guide online by visiting us at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Celebrate National Farmers Market Week, August 3rd through 9th. It's the perfect time to explore your local market and enjoy some peak summer produce, sweet corn, juicy tomatoes, berries, and more. Support local farms, eat fresh, and build community. Mass Farmers Market supports more than 200 markets across Massachusetts, growing food access and farm sustainability statewide. Find a market near you at massfarmersmarkets.org. That's massfarmersmarkets.org. Sponsored by Mass Farmers Markets.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
Mike, have you ever been quished?
I have never been quished so far as I know, and I didn't know the term quishing until today.
So, what quishing refers to is a QR code that is put somewhere that leads to a bad place. Something where cyber criminals want to steal your information, typically.
So if you've heard the term phishing, I believe that we are taking phishing and applying it to a QR code here.
So we put a QU at the beginning of it because every Q has to have a U after it, except for weird words. And so that's where we get quishing. And the big thing is you never know before you scan a QR code whether it's going to a legit source or not. There's a pretty good chance if you're using your Netflix app on your TV,
you're good to go.
Probably going to be okay.
Scanning a QR code on the pump at the gas station? Good luck.
Not necessarily legit. And so
this is a smart scam, honestly. Yeah, like we all got so used to using QR codes over the course of COVID. I don't think my parents had ever scanned a QR code until they had to go dining out somewhere and there were QR codes instead of menus. And so suddenly the entire baby boomer generation especially is used to using QR codes, but also probably lulled into a false sense of security about when and where they can use them safely.
Yeah, according to NordVPN, 26 million Americans have already been directed to malicious sites by QR codes that are taking you to malicious sites.
Yeah. So I don't know how to tell people to beware about this other than don't scan things with your phone unless you actually know who put that thing out there.
Yeah.
Don't stick, it's like I tell my little children, like,
don't
put that in your mouth.
Don't lick it. Don't lick
it. Come on.
Don't scan it.
You don't know where that was from.
Don't scan it.
Saving for college once felt essential. Some parents rethinking their plans, specifically some hesitance to use 529 plans, which I would argue is coming at that hesitance anyway, coming at the worst possible time. Probably because of some misunderstanding, but for good reason. Parents are a little bit suspicious of, hey, will my kid actually want to go to college? Are they going to get their money's worth? There's a lot more being talked about that these days. I would make the case that with the changes that the Trump administration has just made to college lending, with the increasing cost of college, and now with the flexibility of how 529 plans are able to use, that there are very few people in the United States who are in danger of ever overfunding a 529 plan these days. It seems very rare to me that that's going to be the case, and I think that's the primary concern people have is the lack of flexibility when it comes to funding one of these, and I would say that those concerns are overblown based on how easily it can be used now.
Yeah, I think there was a reasonable case maybe like 8 to 10 years ago where you could say, hey, who knows what's going to happen with student loan debt and could some of it be forgiven? And this that ship seems to have sailed.
Yeah.
And so at this point, the downside risk is, okay, you don't use this for college or higher education. Yes, like you'd have to take a 10% penalty to use it for something else, or you can always just roll it over to the grandkids eventually because you can always change the beneficiary on a 529 plan.
Or distribute out to Roth.
Correct. Quick break for the entire rest of the day. A busy Tuesday tomorrow. We'll see you then.